For that, Mayuresh Joshi joins us, fund manager with Angel Stockbroking. Mayuresh, the bulls are clearly in a driving seat, irrespective of what the concerns are, how rich the valuations are. Markets, they refuse to go down, and whenever they go down, they bounce back like a spring. Mayuresh, is my voice reaching you? Okay, never mind.
No, sorry.
I'll tell you what I want to point out is that when it comes to the HNI activity, and I would like to use the word ultra HNI here. Watch what Ashish Kacholia has been doing. I have the strongest regard for the kind of guerrilla investor he is in. He never likes to buy very large cap or mega cap stocks. He likes to hunt in the pond which could be called as a $1 billion pond or a sub-$1 billion pond in terms of market capitalization. Very smart in identifying companies which are not tracked aggressively by brokerages, but companies and businesses which are at an inflection point. So it does not fear from taking outsized bets in mid-cap stocks which have potential to give you outsized returns, because either the company is on the verge of turnaround or the sector per se could see some benefit because of what's happening in the economy or what's happening in the business. Now, what has Ashish Kacholia bought yesterday, and why am I mentioning that? Well, he's bought little above 0.5% stake in Lumax. He added another 5.3 lakh shares in Nosil in the month of September. And Bodil Chemical, he's acquired another 1% through his investment arm. KPIT, when the PE investors, they wanted to exit, Ashish Kacholia gave them a good and a smart exit, and he bought about 1.5% stake in that. Now, some of his other top holdings which have done incredibly well. One is Pokerna. He bought, I think the stock was closer to 150, 200 couple of years ago, and now it's a 4-digit stock. Nosil, I've already told you, is bought into it. Shell Engineering, he owns like a large stake in Shell Engineering right now. So why am I mentioning Ashish Kacholia's name again and again? Because he's like this new smart kid on the block. Kid is not the right word, but he's a smart investor on the block. He likes to fish in this pond which could be called as a $1 billion pond or a sub-$1 billion pond. Very aggressive, takes large bets, associates with companies which are not widely tracked, companies which are at an inflection point. He's got his ears close to the ground, does not follow mathematical model. It's not like you focus on a particular theme or a particular idea. Does not have a style, but likes to associate with businesses which are associated with which are at an inflection point. And then I think whereas we continue to mention Aisha and Tanveer, the importance of what the SIP money is, the sense which I got at the Morningstar conference is that look, SIP money is a constant money. But what is creating excitement in the small cap space is A, the PMS crowd, and B, the ultra HNI investors they are doing. We don't measure the money what PMSs have or the kind of money which some of these HNI investors are putting in. So for me, that's like the important space, important pocket to monitor. The market commitment of some of these HNI investors now runs into thousands of crores, and that's very difficult to get captured in any kind of institutional data. But you have to watch what some of these guys are doing.
Yeah. Okay, let's take it across to Mayuresh Joshi and figure out whether he tracks any of these stories. Mayuresh, just discussing the prospects of a Lumax Industries, is that a stock you track at all?
Morning, Aisha. No, not particularly Lumax, but generally I think, as Nikunj was rightly pointing out, I think there are opportunities across market cycles, and the mid and the small caps are offering them even at this juncture. So I think it's about the earnings perspective that one can really look at all these stocks. He was mentioning Bodil Chemicals. Yes, I do like that stock from a long-term perspective. And look at the dynamics that the company has posted over the past few years. ROE is well in excess of 35 odd percent, ROC is in excess of 30 odd percent. With all the curves that are probably going on in the Chinese markets, again, this company is going to significantly benefit. And if it's able to maintain its run rate of what it has done in the past, my own sense is that the kind of return ratios that it has posted, it can easily achieve that going forward as well. So yes, I think if I have to pick and choose, Bodil probably remains one of my favorite choices over the long term. And a clear disclaimer, we hold this stock in our funds.
Ashish, in fact, Ashish Kacholia's portfolio is what we are going to be discussing through the course of the show, as we highlighted some of his key holdings. But I just want your quick perspective, Mayuresh, on where you're finding value in this market, because again and again it's really pharma which is coming back on the screen. Yesterday as well, Lupin was up. You had a fair amount of traction seen in Cipla. There seems to be a concerted effort by the market to find the turnaround stories here, or the stories which have bottomed down perhaps.
No, so there are two aspects to the whole thing, Tanveer. I think obviously value stays within pharma and IT, because the stocks probably have not moved at all because of all the concerns facing both these sectors at this point of time. But are these concerns going to last over the next 2 to 3 years? My own sense is that you're probably going to see small abatements happening in terms of all the noise that you're probably seeing around these sectors. And as things start getting resolved, value will start emerging. So yes, from a valuation bottom-up perspective, stocks within the pharma and IT space do offer good scope for long-term investors. But at the same time, I think there are these earnings stories as well. So I think if you want to have a mix of earnings momentum plus extreme amount of growth that can come through, corporate-facing banks is something that can really provide this impetus over the next 1.5 to 2 years. You probably got selective auto ancillary companies which can still go on this path of a strong earnings and growth momentum. And largely, again, I think the cyclical themes, cement as a sector is something that we have continued to like, and we continue to like that with a 1.5 years perspective, as well as the power EPC space. So yes, I think selective themes can still work in the market, both from a value perspective as well as an earnings and growth perspective. But value does exist in pharma and IT. Lupin does offer extreme amount of earnings potential over the next 1.5 to 2 years. Earnings can be subdued for the next quarter, 2 quarters, but largely, again, I think the long-term value does stay in stocks like Lupin, Aurobindo Pharma, where my belief is that the earnings story still remains intact over the longer term.
Right. Mayuresh, also want your perspective on the big story that's top of mind this morning, which is Bharti Infratel and the buzz about acquisition there. They're talking about $11 billion. I don't have the back of the envelope numbers on how this really pushes up valuations, but that's a staggering figure. Bharti Infratel, of course, has been moving up. If you can just bring up the year-to-date chart, that would reflect the kind of steadiness and strength the stock has seen as an infrastructure play from the telecom sector. But how do you view this deal, which is doing with some of the marquee names and the most prominent names from the funding industry getting behind the business?
No, so a large element again, Tanveer, of the entire business model specifically for telecom tower companies is going to be how they're able to accelerate their revenues in terms of their tenancy ratios. Obviously, I think you've probably seen consolidation happening within the industry, but as the data rollout intensity goes on quantifying over the next few quarters, and as the appetite for data volumes across the Indian consumers keeps on increasing, my own sense is that the tenancy ratios should probably stabilize going forward as well. Yes, you're seeing consolidation in the industry, and that might have some amount of leeway in terms of how the mid-term or the medium-term outlook in terms of consolidation of towers might pan out. But largely, again, I think it's a 3-4 player industry at best, and at this point of time, again, in terms of the business dynamics per se, I think the business dynamics does offer sense over the long term. Whether the stock can perform specifically from a medium term perspective, my own sense is that the stickiness in terms of reported numbers might very well continue, and the stock might move in a range. So it's very well that you might get valuations for the tower business as a whole. But generally, I think number reporting can still be sticky. The Bharti Infratel has a fantastic balance sheet. But my own sense is,
you know what? Stay with us. It's 8:45 already. I have to quickly go across to our chartists and get in some strategies. And then, of course, we'll chat with Dipan Mehta on his take on the markets.
Aside of that, the oil and marketing companies, at least in the pre-open session, are showing some traction. Mayuresh, what's the call, particularly on an IOC and an HPCL?
No, so I think the kind of reported numbers that can come through in Q2 can be quite stupendous for both these companies. The Singapore GRMs are resting around $7.7 a barrel, And again, the kind of refining improvements that both these companies are making, the capex programs that they are embarking upon, and the expectations of crude staying in a range, I think all these factors are probably going to help their operating cash flows, and these cash flows would be sufficient enough to probably fund their capacity expansion. And at the same time, I think the kind of dividends that they pay out, they might still very well continue. The oil minister's statement in terms of marketing margins being maintained or not getting tinkered around by the government again gives sensitivity to earnings improvement for these companies. So a large element is that the earnings growth should continue, the dividend yield remains extremely strong. So yes, I think the positive call both in terms of IOC and HPCL continues from our side.
Mayuresh Joshi, what is your thought? Bet on e-commerce or stick by with the regular brick and mortar, because at least when it comes to India, that seems to be really profiting?
No. So the trends definitely are changing towards e-commerce and the digital platforms. But the brick and mortar model also works in India because I think the transition phase is going to take time. So it's not going to be an overnight paradigm shift in terms of the e-commerce portals totally. But yes, with the kind of data penetration that we're probably looking at, smartphone penetration, you've got these smartphone launches by Reliance Jio. I think how that offtake probably happens and how the density of the rural population probably takes that. Yes, I think the e-commerce story is here to stay, but I think the transition is going to be a very slow and gradual one towards that, specifically from the rural side. So I think the brick and mortar players should also probably show their numbers at least for the next 1 to 2 years.
Mayuresh, let you go on that note. Thanks much for taking the time out and joining in. Just a few odd takes when it comes to the